Hello, everyone. Thank you so much for joining us today. As you're coming in the webinar room, I want to welcome you. My name is Marche, and I'm the webinar director here at Advice Chaser. Before we introduce our guest and get started, I do need to do a little bit of legal housekeeping. Advice Chaser, the host of this webinar, is not a registered investment advisor. We cannot and do not give financial advice. Today's presentation is for educational purposes only and cannot be considered advice for any person's individual situation. Advice Chaser regularly hosts informative webinars, such as this one, featuring a variety of knowledgeable professionals, many of whom are licensed advisors. Any opinions, ideas, jokes, or principles expressed by presenters are their own, and however true, funny, or interesting, are not endorsed by Advice Chaser. Please do not act on the information you hear today without consulting a qualified financial professional. We're thrilled to bring you this educational presentation today. A couple of notes for our attendees. You are on mute, but we do encourage you to ask questions using the chat box, and the presenter will answer those queries during or after the presentation today as appropriate. If you ask a question in the chat box, go ahead and leave your phone number as well. And if we can't get to your question during today's event, we'll make sure someone reaches out to you after the presentation. We want this experience to be as educational as possible, so please don't hesitate to ask for clarification or expansion of the material. Well, I'd love to introduce you to our presenter today. In just a minute, let me go ahead and pop up his picture here. Here we go. Mark Seither is a partner and wealth manager with Kingsview Partners in Knoxville, Tennessee. He has a Bachelor of Arts in Economics from San Diego State University and began working as a financial advisor in La Jolla, California. Mark enjoyed finding innovative solutions to clients' complex problems, and his desire to work with the entrepreneurial-minded helped him thrive as a financial advisor. As Mark honed his skills as advisor and planner, he looked for a platform that would better pair with his desire to work with clients needing advanced planning and specialized fixes. He found a spot back in Northern California in early 2017 when he joined Trust CFO and assisted in integrating complex tax and estate planning with wealth and investment management. Since then, he has collaborated with Josh Saunders to build Kingsview Partners. Together, they assist individuals on wealth management and tax strategies. And I'm going to go ahead and turn over the time to you, Mark. We're excited to have you back and excited to hear what you have to say.
Yes, thank you so much, Marche. Very excited for today's topic of how to pick an effective wealth manager. And this topic was semi-birthed from kind of a recent experience where someone was going through the someone close to me within my network. It was talking about their experience with the person they were working with, and I just asked them. I was like, okay, well, I mean, how did you vet this person? How did you pick them? And they had said, like, well, about 20, I think it was 25 years ago, I was at the fair and the county fair, and they had a booth. And obviously everyone wants to put a little bit more thought into, like, hey, I need a financial advisor who's close to the Twinkie bar, right? The deep fried Twinkies. But it does beg the question of, okay, but what is that thought? Because it can be overwhelming to pick a wealth manager, because really you want to stay with them for the long haul. So I think before we go into how to pick one, I think setting the expectations, though, of what people should be expecting when they're looking for an advisor, right? So people should be expecting to establish some stability and gain some confidence in the trajectory of their life and how things are going to fit together and develop. And you want to also have someone who is integrating the various aspects of your life outside of just a single investment account, right, into what you want to do with your life, right? So you have work benefits, you have your personal savings or spending habits, liability and insurance needs, right? Those change from time to time, estate planning, tax strategies, cash flow and investment management. These are all kind of tied into if you're trying to get from A to B and grow your net worth and build the future you want to build, you can't do it in a vacuum. All of these things do get impacted. And so what you should be expecting in a wealth manager is, are you accounting for these things and are they tied together? And then also ongoing improvements, right? I mean, you generally want to have consistent outcomes, but the way you get to those outcomes are going to vary throughout different phases of your life, right? So you want to make sure that you're not doing the same thing over and over, right? Some people will be like, hey, if it worked then, it's going to work now. It's like, well, as you get older and as things change, family dynamics change, you probably need to make some changes. So make sure you have someone who is guiding you through stuff like that. Now, the reason why most people will stop and get a little overwhelmed there is because that can be kind of an overwhelming feeling. And so to simplify it and to say, hey, we're going to make sure that this doesn't get overwhelming, you really just need to start thinking about that list of things I talked about. Start thinking about it like a business, right? Get an advisor who also thinks like a business, right? Like a business owner, and starts organizing things like a business owner. And when you do that, it becomes a little bit easier, right? And I'll typically walk people through the scenario of, hey, when you start thinking about, hey, my work benefits, my personal, savings habits, my investment goals, and all that, you start thinking a lot. And when your brain is kind of on hyperdrive, you actually are burning brain calories, right? And so you got to imagine your brain is on a treadmill. And when you poop out of that treadmill, right, and you tucker out without any sort of resolve, that's a defeated feeling, right? So we want to try and burn less calories, right? And so how do we burn less calories? We start thinking like a business, right? So business owners, everyone on this webinar, like, congratulations. Moving forward, as of today, it should be, it's the Mark Seither LLC, the Mark Seither World Domination LLC, right? My personal
your personal
sheet,
business.
I am my personal business, right? The income I make is the revenue from the sales or the services. It's how we develop things inside. And business owners have two main focus points, right? One is tax reduction. If any business is not going after, an aggressive CPA, tax credits, advanced tax planning, right? Lowering that, your tax bill is arguably the biggest bill you'll pay in your life. Reducing that is going to put more money into your business, right? With the money you have in your business, you then want to start accumulating wealth generating assets that work when you're not working, right? Because if you think about things in this way, what a non-business focused advisor would do is he would say, go make money, pay the government, pay your bills, and then with this left over, watch the amazing things I do with it, right? If you shift that to say, okay, I'm going to go make money because I got to make money. I'm going to pay the government because we got to pay the government. I'm actually going to pay myself first, right? I'm going to switch those last two around, pay myself first, and then I'll pay my bills. But then with the money I pay myself first with, it's not, you don't want a wealth manager says, okay, just put that there and watch me create awesome things for you. It's, okay, what do you want to build from here? This shouldn't stay here. It should go, like, do you want to buy real estate? Do you want to get into side businesses? Do you want to go start doing things that maybe reduce that tax bill, right? Because remember, we made money, we paid taxes, we paid ourselves. Well, if we can reduce taxes, we're going to pay ourselves more. If we go shift that money into things that dump money back in the top, right? and start paying us more money, right? Now we can start having our wealth make us money when we're not making money, right? And when your wealth starts making money when you're not, then you can start looking at that R word, right? Retirement, right? You can start looking at that as an optional, like, hey, if I start replacing my income, now I'm working for me. I'm not working for anyone else. I'm working when I want to work, and I'm stopping working when I want to stop, right? So that's the goal there. And so from this day forward, right, everyone just start thinking about, hey, I am my own business, and I need to start looking at cash flow, tax planning, and how would a business grow their influence and their, reduce their taxes, increase the revenue, right? So, and like I mentioned, people often feel discouraged because many professionals have a very slim focus, right? They'll say, hey, come work with me. If you want to go to the next slide, come work with me. I'm really great at, and they'll just have a small thing that they actually do, right? And so when you start getting outside of that, when you start saying like, hey, what should I do with my work benefit? How do I incorporate my work benefits? How should I pay off this debt? How should I do this? They really don't give much insight. I'm still on the there you go. I think my computer's just a little slow. The time burden for these advisors, right? These wealth managers to start doing that additional planning, it's just not in the cards for them. And so people often go in there expecting one thing. The advisor doesn't really have time for that. And so it leaves people discouraged. And then, when you don't have that coach or that mentor to get you thinking in that tax reduction cash flow mindset, your assets and your life is not organized in one succinct direction. You don't feel like you're moving towards your goals. And so, again, we're kind of back to that, your brain's on a treadmill, right? Now you're burning excess calories, getting exhausted, trying to figure out how you're going to do this yourself. And so that's something that you absolutely should avoid, right? You want to avoid putting yourself in that position. So like I mentioned, my how to pick a good advisor was not, hey, start thinking like a business and just hire an advisor to do all that. It was, you need to think like a business owner. You need to have an advisor who also thinks like a business owner, and you guys need to be on the same page, right? If you want to build, if you want to skip to the next slide, or maybe my computer's slow again. If you want to build lasting wealth, it is going to be through that business lens. And so when you're picking, if you have an advisor or if you're looking for one, you really should be not asking them, hey, how aggressive should I be? How conservative should I be, right? Those things are going to come into play, right? Those things are going to come into play, and a good wealth manager is going to be so incredibly efficient on that front that it actually reduces the amount of time he talks to you about that, which doesn't mean the less time he spends with you. It means the more time he starts talking to you about, and what would you like to build, right? How would you like to move your assets? Would you like to start building a real estate portfolio? Would you like to start getting into, these different sectors of the economy or building businesses? And when your little mini business starts supporting your lifestyle, your job becomes optional, right? And that's a great feeling. That's a great feeling to say, hey, I paid myself, I put that money into something that reduced my taxes. That means I get to pay myself even more. I got that money somewhere that, circulated money back into the top of the funnel. And now, again, I'm not working for someone else. I'm working for me, baby. Like that's a fantastic, and just on a personal note, I typically, I don't shy away from retirement ages, but I do let people know that when people successfully replace their income, most of the times they keep working, right? Because they like being productive. They like what they do. They've slowly morphed their career into something that's enjoyable. It's no longer a I mean, I won't throw specific job titles out there, but I definitely know some people where they've got a paper chain for the next, like, hey, as soon as I get through this last 5 years, I'm punching out and I'm sprinting out of the office. That's normally not people's ideal career. And so by building, your own private wealth into your own private business, by slowly replacing your income, you end up pushing yourself into jobs and positions to where you're like, you know what, I'm actually happy, and I feel fulfilled. I'm serving the people I want to serve. And so I'll keep working even though I don't have to, right?
It's funny because you mentioned that. I was just talking to a friend of mine yesterday, and she was saying the same thing about how, I don't have to work anymore. So I was able to retire early because of my financial planning. And then now I'm building, she wanted to do some other more fun ventures, but she doesn't have to worry about, she's still working, but she's not working for the paycheck. She's
Yes.
working for herself.
Yes. And not to get too off topic, but it tends to be state jobs where people are just like, man, I was 10 years away from retirement, and I made a paper chain, and I just every day tore off a link. I just could not wait to get out of there. And I've known a few people who, they hit their retirement and they get their pension and all that, and they'll be, 60 or 62. Within 18 months, they go and find a part-time job because they're bored. They're like, I'm too young to be sitting at home watching TV all day. So, you do want to find something that, more for your career to something that you want to do. So I think we've drilled the point home enough of thinking like a business owner. And if you think like a business owner, you're going to know, you're going to find an advisor who also thinks like a business owner and helps you build your business. So here's a checklist of, if you're going into an office, someone with good answers to these categories is probably going to make for a good advisor. So you want tax efficiency, right? I put that at the top of the list because, I mean, you can argue over how to make 2% more return in a taxable account, or you can try and find 20% tax savings, right? I mean, keep more money in-house to go make money for you. That's paramount. Diverse asset accumulation, right? And I'll dive into the importance of that here in a bit. Asset protection and risk management, right? Some people think that they are not big enough to need asset protection. Trust me, I'll bet you I could find 10 people tomorrow who'd love to sue you, and I could find 100 attorneys who'd love to build a case for them, right? So, I mean, there's still need to have some layer of protection. And then exit planning, right? And exit planning kind of means two things when you're talking about your own personal business. It means, exiting out of certain assets, exiting out of certain strategies, right? There's tax efficient, inefficient ways to do it. There's also control issues. And then there's, exit of life planning, right? Transitioning wealth and transitioning, responsibility to various people. So, when you're thinking about a business owner, business owners have contingencies for, here's if I want to leave the business, and here's if I'm forced out of the business, right? They plan for both. And as your own private business, you got to think of, here's how I want to leave my business, and here's if I don't have the mental capacity to leave my business, what happens, right? So we'll start with, the easy one. And I say easy, just saying it's easy to review. It's by no means easy to pull off on your own, because there's 80,000 pages of tax code, and your basic CPA knows about 2 of those pages, and that's it, right? So, taxes are arguably your biggest expense in life. And if you can reduce that, that is awesome. So you should start asking, hey, how often do you review taxes, right? Do you have end of the year tax planning, right? So, you may get to get to November and it's like, hey, you have until December 31st to do these things to save on taxes and keep more in-house, right? Because after December 31st, not an option. There are some things you can do after the end of the year, but some things you can't. And so it's very important to have that fall meeting. Are you building tax opportunities, right? So here's one that often gets missed. Another little side story, right? Someone, they come to me with a few things that were true, but together a disaster, right? They said, hey, Mark, I have X amount in my 401k that my company's contributed, right? And they said, I also just found out that we can do an in-plan Roth conversion, take our pre-tax, make it tax-free. And I also read that Roth conversions are awesome, right? I mean, those things are all true, but then I just told them, I was like, well, first go check with your CPA, ask him how much taxes would I owe if all of a sudden I made X amount more dollars. And the number that his CPA shot back to him was astronomical. And he was like, man, why would anyone do a Roth conversion? Like, that's terrible, right? And so it was a good opportunity to say, hey, today it's a bad idea. If you were to do this, this, and this, then in 7 years and 10 years and 13 years, we could do slow chunks of that and pay a fraction of the taxes that he just quoted you, right? So that's building tax opportunity. That's if you want to talk in business terms, that's a business saying, hey, I know I'm going to sell that with the huge capital gains. So I want to make sure I have a huge tax deduction in the same year, right? That's thinking like a business owner. That's operating your personal finances like a business. So, are you building, asking an advisor, how are you helping people build tax strategies into their planning? So the diverse asset accumulation. You're not going to get 5 minutes into a meeting with a financial advisor without them talking about stocks and bonds on Wall Street, right? I mean, that's their world, right? There are many ways to build wealth outside of Wall Street, right? So the given and obvious asset to start accumulating is an investment account, an IRA, a brokerage account, a 401k, a 529 plan. I mean, there's almost endless amount of plans we could talk about, right? All Wall Street based. But it should be a red flag if there's no focus on, like, again, you made money, you paid your taxes, you put it in this account. Well, if all they want to do is keep it in there and not let you distribute it to something that gives you tax benefits or give you cash flow, that's a huge red flag, right? Because to me, I'll tell people, I'm like, well, they're managing your money for them, not for you, right? Because, and I won't get into specifics, but typically that money is usually more aggressive than the person wants it to be, and it's going to grow, potentially in the long run, a great amount, but it's not building the future that client wanted. And any idea or creativity in financial planning is typically squashed, right? Because it kind of stays in that world. So find someone who does get excited about, like, yeah, if you want to build real estate, let's find ways that you can build real estate. If you want to get there's something called a self-directed IRA, self-directed qualified account. You can take money that would be in Wall Street, put it in a tax-advantaged vehicle, and then go buy other things with it. Go buy, through the appropriate channels. Side businesses, right? I've had plenty of people come up, with, hey, I should probably leave the details of the business aside, but I did have, someone who they had stumbled upon an opportunity that gave them about 12% rate of return, darn near guaranteed, right? Very unique, very niche, very high, specific, couldn't be recreated. But for them, I mean, it would have been a huge disservice to say, oh, don't jump into that. You should just leave it in the stocks and bonds portfolio, right? I mean, it's, you know, you want to get someone who's excited about, hey, how can we go get you something that's going to pay you cash, it's going to pay you money, it's going to reduce your taxes. That's, you know, a business owner appreciates and prioritizes cash flow over what's going to be the next hot stock tip, right? Like business owners don't wake up saying, what did the S&P do yesterday? What did what did the NASDAQ do yesterday? They're focused on, hey, did my business make money? And how can I make it more money? And how can I make it pay less taxes legally, right? I want to throw that legally disclaimer in there because we've all seen businesses pay less taxes and someone winds up in jail. There's those stories too. So don't be that case. Asset protection and risk management. Now, again, I kind of joked about, hey, if you don't think that you need asset protection, I could find 10 people who probably want to sue you. You know, in live events, when I'm talking to a big group, I'll usually tell them, hey, no one here I'm sure, has ever been texting and driving. Nobody. But I almost guarantee you the person to the left and the right of you has. So, you know, it can be that easy where, you know, a simple text to hit someone or a simple mistake. If you have real estate, if you have a rental property, absolutely the most, you know, I believe the most litigated sector of business. It's very easy to end up in hot water. It's also, you know, it's fairly easy to find layers of protection. First one being just a liability insurance policy, right? Very easy. As your assets grow, you're gonna, you know, we saw this in the asset protection world when I was with Trust CFO, where somebody who had $3 million, they could usually get by with just insurance. Beyond that, the insurance company is going to find a reason not to pay, right? And so you need to have different layers of protection, whether it's corporate entities or just different, you know, there's different trusts and strategies. But you know, an advisor who just kind of, you know, chalks it off of like, well, you'll probably be okay, right? They're not worried about your, you know, they're not worried about your assets because they don't see you as a business and they don't see you as something that needs to be protected, right? So protect your business, protect the cash flow. You know, risk management, you know, it's going to be all the basics. You have to, you know, you probably need to have life insurance to protect everything that the business, you know, is providing for. You can usually get some through work, and there's various ways to get covered there. Loss of income, and this is another one where, you know, I find that people typically will gloss over this and then move on to the next thing. I will say a lot of companies have disability income, and it's very much so worth asking HR, what is our disability income policy? What does it cover? If someone is highly specialized in what they do, and I'll use the pilot, you know, the pilot, you know, commercial pilots as an example, right? They have a commercial pilot's license. There's going to be, hey, there's a disability, and then there's a loss of your license, even if it's for a temporary period of time. You hit your head, you get knocked unconscious. The doctor says you're fine. The FAA says you're not flying for a year, right? And so there's various things where you just want to say, okay, it's not a disability that might get me. It might be something else. Let's just make sure that the business always makes money, right? And then the most overlooked in that category is probably the long-term care protection. And that one does get tricky. And I have there's some newer solutions out there, but an advisor who thinks of you as a business and is going to plan like a business, they either need to be very knowledgeable in this category, or they need to have someone close by who's very knowledgeable, because it is changing drastically right now. It's a huge threat to people's wealth, and you know, it's always a bummer when I hear of people who, their story is, I wanted to leave more assets to my kids. I wanted to get my kids into retirement early, but my spouse had a long-term care event and it soaked up all of our assets. And that is generational wealth. That is just never going to happen now. So also something important to look at. And then there's the topic of exit planning. So exit planning, kind of twofold, one would be who's going to manage your finances if you can't. That's the unexpected, exit, right? Do you have, is it your financial advisor or wealth manager saying, okay, well, if you can't speak for you, who can I talk to? Because if your wealth is being managed, but all of a sudden you can't make decisions and things need to change, I need to have a point of contact, right? That's a very important piece. Who has the authority to make medical decisions for you, right? And this one actually, to get slightly off topic, but something that's come up recently is that this is typically something that I propose to clients as far as like, hey, you need to make sure you have your medical directives, right? You need to make sure that someone can legally speak for you for medical decisions. But then it's come up a couple times where having the businesses realize, businesses being the clients, having them realize, hey, by the way, when your kid turns 18, you have no medical input anymore unless your kid gets their medical healthcare directive done. So again, maybe a little bit too off of a tangent. It's something that has come up recently as far as like, you want to make sure that people you love are going to take care of you and they are set up with the ability to do so. And then also the people you love, you're there to speak for if needed. And then outside of that, making sure that your business that you've worked so hard to build doesn't end up going through probate, right? Doesn't end up, getting bled with probate fees and taxes, as you, I can say, our compliance office really hates when I say the words guarantee. So I'm not going to say guarantee. I almost guarantee everyone here is going to pass on at some point, right? So to stay within the compliance's good graces, I won't say guarantee, but I can almost guarantee everyone's going to pass on at some point. If I guarantee if I put guarantee in there, they'd be like, oh, Mark, you said that G word. So without the appropriate planning, you could be looking at some sizable, prolonged depletions of your estate, in which, again, your wishes to set your family up for success goes out the window. There's also the topic of some assets don't transfer as tax favorable as others. That's a great thing to talk about with a wealth manager. Another example would be had someone with they had a special needs child, and they had said, okay, well, we have a lot of money in our tax favorable accounts. We're going to give that to our special needs child because they need an income. We have a lot of real estate. We're going to give that to our other kids. Well, the way those two things pan out tax-wise from an inheritance standpoint are two very different things. If my parents told me, hey, Mark, you can have a $500,000 inherited IRA or a $500,000 home, I'm an investment guy and I'm sprinting towards the home, right? Like, because I'm like, hey, way better tax-wise, way, like a whole lot more, way less tricky. And for them, it ended up being a, hey, we actually, if your intended result is being as beneficial and providing wealth to your daughter with special needs, we actually need to flip that, right? And they thought they were doing a good job. So, and then the last part of exit planning I'll touch on is the strategic transfer of wealth, and that could be either to people or even from one place to another, right? making sure that, hey, I need to get out of this industry or this sector, or I need to dump this asset, right? Is there an efficient way to exit out of that part of your business, right? Exit out of that silo of business, right? Exiting from working, right? Exiting from your career, exiting from maybe you were in real estate and you need to get out of real estate tax efficiently, right? There's some efficiency there. You can leverage charitable organizations in a way that in the long run actually make you more money, which typically people have a little hesitation around, is they're like, how can you give things away but make more money, right? Little plug, did a webinar with Ed Cotney on Advice Chaser. You can go look up some of his strategies for how to do that. But you can bless organizations, bless your church, bless whoever you want to bless from a charitable standpoint, and make more money in the long run for yourself. And then your exit planning will need updates from time to time. Tax laws change. Your life changes. So making sure that your business, right? If we're thinking about this linearly, I worked, I paid my taxes, I paid myself. And we're going to stop right there and say, okay, now when I pay myself, I'm going to focus on my tax strategies. I'm going to work on finding some diverse, a good diverse collection of assets that pay me cash flow and work with the wealth management strategy I want to work with. I'm going to make sure that I'm protecting myself from catastrophic loss and catastrophic this and that or lawsuits. And then I'm going to make sure that when it's time to quit, I can quit, whether it's on my terms or not, right? Like things are set up, and like I said, any good business owner wants to eventually phase themselves out, right? They want to get to a spot to where it's like, hey, I go on vacation, this puppy keeps working, it keeps making money, right? I want to just quit altogether. I smoothly transition out, and everything goes to where it needs to go. The people who need to run it. The people who call this are I think the right people to make decisions. But also a good business owner knows, hey, if something happens to me and I'm not ready to leave, but I have to leave, the right people are making the right decisions. The right people are managing, and the assets go where they need to go. It's an unfortunate circumstance, and this did happen probably about 10. Ooh, sorry, my standing desk just lowered on me. This was probably about a decade ago, where there was an event where someone in the family, they had the things were not on their terms situation, and you can't put things in place afterwards, right? And they unfortunately, they had done a good job about paying themselves first. They had done a good job about building diverse assets. They had done a good job about protecting against some things. But then when it came to their exit planning, it kind of unraveled so many things that they had worked so hard for, and it did not end the way they would have wanted things to end. So that would be, man, I should have picked a happier story to end on. That was a downer. I feel like I got to do a song and dance now or something, but that probably wouldn't happen.
I'm sure there's lots of happier stories. It's just sometimes those sadder stories help us realize, hey, maybe we need to plan a little more so that doesn't happen to us.
Yeah, exactly. And the good thing is like I mentioned, it can be overwhelming when you start thinking about it at once, right? And your brain gets on that treadmill, you start getting tired, you hop off, your brain stops thinking about it, but you didn't come to any solutions, you're feeling defeated. So if you start just slowly trying to retrain your brain on thinking like a business owner, get a wealth manager who also thinks like a business owner, and start looking at those four things, right? What are my tax efficiencies? How can I take the money I'm paying myself and build diverse assets, right, that are accumulating and paying me money? how do I protect against lawsuits or unfortunate circumstances, right? Because that will take a absolute crushing blow to your balance sheet. And then how do I start planning for those exits, right? Some of these estate planning or exit planning strategies, they take quite a few years to put together, right? You know, a good wealth manager is going to be agnostic as to how you want to build wealth, right? They may caution against some things appropriately, right? You know, if you're like, hey, I really think this company that's digging for oil on the moon is a great investment, right? I mean, like they might appropriately caution against those things. But you know, you don't want the guy who's going to be like, you don't want to go into real estate. No one ever makes money in real estate. You got to stick it in this account, right? Like you want to stick away with, stay away from that sort of thinking. Like I mentioned, incorporating your outside planning. You probably have resources outside of what your advisor does. And he should be leveraging those resources or helping to improve them, right? If you have a CPA who does some awesome planning, they should be working alongside the CPA, not fighting the CPA. If your advisor and CPA are fighting, you should find out why and find out which one you got to fire, right? And then, you know, their business-minded focus should be obvious in their work, right? It's fairly obvious when I hear the stories of people who say like, yeah, I go in for my annual meeting and the market was down and they said like, well, the market's down. And so we just want to stick it out. And then when the market was up, he said like, hey, everything's up. So good job. We're going to keep doing this. And, that may be the right thing. I don't know all the details to say if it's the right thing, but I do notice in those scenarios that there's no direction as to like, everything kind of circles back to do nothing, keep the money there, stay there, don't ever move it, right? The money's down, keep it there. The money's up, keep it there. So a business, if you find someone who's business minded, that they'll typically say like, hey, yes, the money's here. At what point do you want to deploy this? Like, what do you see your life looking like? What kind of assets do you want to give your kids or grandkids, right? What kind of income do you want to build for yourself, right? There's, business owners are tax savvy, like tax focused. So a business-minded advisor probably also going to be very tax conscientious, right? Those are things you want to look for when it's, and your advisor could be knocking out of the park on all these fronts. I hope he is, and I hope that you are building great things. If they're not, start asking around. If you have maybe a close friend or family member that is an entrepreneur or entrepreneurial minded, you might ask them what who they use or whatnot, right? Because those can sometimes be great resources. But find successful people in what they're doing, and just get some helpful hints from them, and that should help you find the advisor who, again, as you start thinking like a business, can coach you on more ways to think like a business, thinks like a business themselves. And pretty soon everyone's got their own little mini business, right, that they get to retire on.
It's funny how you talked about thinking like a business. When I think about businesses, first thing I thought of was, well, they're worried about making money, and then also they're worried about their expenses. And can you talk a little bit to that too?
Yes. So from the expenses, I mean, so you notice I mentioned, hey, you want to, that the old way of thinking, right, of like, hey, make money, pay the government, pay your bills, pay yourself. Switching those last two around is really going to help with that expenses portion, right? Because there are nearly zero people who don't end up with some money that slips through the cracks, right? And so what ends up is you end up paying yourself very little or none, right? Or you feel the pressure to, I've got to get a better job because I'm a little bit behind and I've got to make more money. Well, you make more money, but if you didn't control those habits, probably going to just let more money slip through the cracks. So a good monitoring of, hey, you make sure you pay yourself first, and with the leftovers, we can hash out the expenses. I'm pretty agnostic when it comes to expenses. I don't care if people buy $6 lattes personally. Like, I mean, it's one of those, like, some people are like, hey, you want to save money, make coffee at home. I'm like, there's easier ways to tackle that issue, which is if you pay yourself first, you're just going to have less money for coffee, and still go ahead and buy it if it's worth it, right? I can't tell you if it's worth it or not. But the other thing is, so for instance, on the expenses portion or the cash flow portion, this has come up where people look at, okay, well, I got to move into a bigger home, right? Have another kid or whatnot, got to move into a bigger home. And they'll just tell their advisor, like, hey, we're good news, we're selling this house and we're buying another one, right? Fantastic, might be a great idea. Also, might be a good idea to be like, okay, well, let's look at what money is inside of your little mini business, right? Because what if you were able to put a down payment without selling that house? How much would you get for rent for that house? What if that house then was one of those assets that gave you tax benefits, depreciation, you got to run some expenses through it? What if you had enough equity in there to where you could actually sell that house and buy 2 rentals, right? What if by having 2 rentals, you're able to create a corporate entity, put those two things in the corporate entity? What if you're then able to buy a third one, and let's say you had enough money coming in there that you're like, oh my goodness, I've got extra cash flow. Do I want to pay myself, or do I want to sponsor my own 401k and fund that and not pay any, and defer all the taxes, right? So in that one decision, right, it's very easy for an advisor to, who's just thinking about, like, oh, cool, you're moving. Awesome. Great. I'll send you a card. I'll buy you a bottle of wine, right? They love that marketing stuff. Like, I'll buy you a bottle of wine. Good job. And maybe turning it into a rental is a terrible idea, right? But if it's not explored, right, that's not thinking like a business owner, right? If it's not explored as far as, okay, well, you have a rare opportunity to take something that was a bill and make it one of those assets that pays you money and gives you tax benefits. And my opinion is that the reason why it doesn't get brought up is because the advisor's like, well, yeah, because to get that house, and if they want to put 10% down, that's, it's going to be 50 grand out of this account, and I'm going to have to liquidate 60 grand because they're going to have to pay some taxes on that. And that's 60, they're doing their billing in their mind. They're like, I'm going to lose X amount of revenue, right?
Mm.
And so it just doesn't get brought up because it's like, yeah, sure, that's a very common thing to do. Sell that house, buy another one, right? So that would be a good example of, simple things throughout your life that you may not think are business-minded activities or business-minded thought processes, that, a good advisor will catch those and say, hey, before you make that decision, let's do, think about this first.
Interesting. So I had a question here about people who actually own small businesses outside of like their regular job. Maybe they have a side hustle. Can you talk a little bit about the tax benefits of that?
Yeah, so there's going to be, depending on what you do, right? I mean, you can have some qualified business income, which comes with its own tax benefits. You can have, you can sponsor your own. So some people will say, like, oh, well, I have a 401k. Awesome. I'm going to put $4,000 a year into my 401k, and I can put a total of, the amount changes, right? So right now it's, right now it's 20,500, but it's going up, right? But you actually can put more into a qualified plan, as a business. You can do what's called a profit share. You can put, north of 60,000 per spouse, right? And so for people who have side hustles, it's, okay, well, first off, let's see, what are your personal expenses that could be business expenses, right? Oh, you use these things for business. Well, let's immediately start, reducing your income by, get a good CPA. Basically, that comes down to get a good CPA who is not a tax preparer, but an aggressive tax planner, right? And then you can start looking at, okay, well, what are ways that I could expand my small business, right? And scale my small business. And then with the revenue that comes in from my small business, again, do I want to actually pay myself, or do I want to put that in retirement accounts, or put that in, go buy real estate with that? Because, and not to get too detailed on the tax front, but your passive income, is taxed, in your brackets, but then you can take certain depreciation, against those assets, right? So if you're, have a small business, there's certain things within your business that you can take some depreciation on, and so that comes back to timing out your tax years correctly, where it's, hey, I know I'm going to have a huge tax issue this year. Let me try and line some things up to have a huge tax event that offsets that in the same year. So, and again, when you start calculating the effect of keeping more money within your business via tax planning versus trying to pick stocks and time the market right, I mean, it's, the tax conversation far outweighs it.
All right, we have just one more question here before we have to end, but this is a good one. What if you really do want to focus on a investment portfolio? Maybe you're not interested in the overhead or the extra time and effort it takes, and they wanted something that's a lot more passive, which real estate investing may be passive, but it can be very arduous as well.
Yes. So it's my experience that a business-minded advisor, right, is going to be hyper focused on that investment piece, right? Because they're wanting to make that super efficient. They're wanting to make that, it is the cornerstone of their practice, right? And so for me, it's one of those things where it's, hey, there's still ways to look at your investment accounts like a business owner does, which is there are still conservative ways to make money, right? I've definitely run into plenty of people who have just said, hey, you go aggressive because big risk means big returns. And I always have to throw in there, I'm like, it actually means a smaller chance of big returns, right? It's not that simple. I mean, if it were that simple, I just ask anyone, like, okay, well, if you bought GoPro's IPO, which has been down ever since, are you just going to keep holding it forever and hope that GoPro, there's definitely more thought into it. So from a investment standpoint, if you want to implement that, think like a business owner, you do have to make sure, hey, there is a proper risk alignment, right? If you're not an aggressive person, don't force yourself into aggressive positions. Is there an actual investment strategy? Because buy and hold is not a strategy, right? I mean, if you just buy something and never sell it, like that's, you actually have to have a system as to, like, hey, these are the types of investments I buy. These are the types, and you and your advisor have to be on the same page there. And then the exit strategy, right? That still applies to, that applies very, very much so to the investment world, right? You have to know, hey, at what point do we exit out of these positions? How do we reduce the taxes on those exit strategies, right? There are things within your personal life that you can time out well with. This would be a good example is, I had someone who was very upset. They had just talked to the person at the bank, and they had said, hey, I need $100,000. They just told me what the taxes were going to be withheld from that $100,000 based on my income. And I'm just livid, right? and being able to say like, okay, well, when do you need the money by? Well, I need it by this date. Okay, well, if you took half of that on December 30th, and then the other half on January 2nd, then actually within 4 days you have $100,000. But from a tax year perspective, you had 50 this year and 50 that year. You still have your 100,000, but the taxes were reduced greatly. And then if we just time out some things on that second year to where you just work less anyway, you got some benefits there. The other thing on the investment side is there are ways to, like, if someone is charitable, someone is a giver, right? It's, hey, here's your investment account. You give 15 grand a year to this charity, and that's awesome. That's amazing. But you claim the standard deduction, and the standard deduction basically means you're not feeling the benefit, like you're giving, but you're not being rewarded for your giving. So,
right, because the standard deduction is so high now, most people take that and it doesn't account for all the things you could itemize maybe in a year where you do more. Yeah, talk about that strategy.
If you were to say, okay, well, let's see, if I do, well, okay, how about I do 45,000 from my brokerage account and I donate it to a donor advised fund, and I take a $45,000 deduction. And then the next 2 years, I just don't give them any. I just distribute from that donor advised fund, but then I take the standard deduction. Now we're getting the full benefit of our giving, and then we get still the same standard deduction as we get either way, right? So that does play into the, hey, what do business owners focus on? Tax reduction, right? So now we're using our investments to focus on tax reduction. That's still thinking like a business owner in the investment world.
Well, thank you so much, Mark. That's about all the time we have for our webinar today. I want to thank you for being here, and I want to thank the organizations that have made this webinar possible today. To our attendees, look for an email with a link to the replay of this event, and you're welcome to share that with friends and family. Here at Advice Chaser, we're all about helping you find a financial advisor who's a great fit for your life and your financial questions. Our matching service is free to you, and every one of our advisor partners has committed to offer a free initial consultation to anyone we introduce them to. Find out more by going to advicechaser.com and clicking on the link to find an advisor. Once again, from Advice Chaser, thank you so much for coming, and we'll see you at another webinar soon. Goodbye, everyone.
Thanks, everyone.